Hello, I'm Alex Davies, founder of Wealth Club. Today I'm with Andrew Martin Smith of Guinness Asset Management to talk about the Guinness AIM EIS Fund. Firstly, tell me about Guinness and your own background.
Guinness Asset Management is an independent fund management business based just across the river here. We have about 58 people in the business. We're based mainly in London. We're independent. We're mainly known for our long-only fund management. We manage just under $5 billion, and we've been growing very, very well over the last couple of years. As part of the Guinness Asset Management's fund management, we started an EIS business in 2010, and we run EIS funds which invest directly into private companies, as well as into the AIM funds, which is the ones that I run.
And your own background?
I have been involved all my working career in either funds management or corporate finance. I started as a graduate and went into a merchant bank, and since then I've worked in the asset management business since the 1990s. And I've always had a strong interest in smaller companies and private investments.
So talk to me about the AIM EIS Fund. What's its objective?
The AIM EIS Fund aims to give the investors an exposure to the most exciting businesses that are looking for risk capital on the stock markets. And I think that's what determines it most of all. The important thing is they are looking for exactly what the stock market's meant to be bringing, which is risk capital to businesses which have developed sufficiently to have a public listing. And we tend to make sure that our funds are run really like a closed-end fund, so that each investor gets a proportional representation in each of the investments. The principal objective of the AIM EIS Fund is to make sure that we can allow our investors to get the tax reliefs for the year in which they invest in our fund, so that they can use them either in that year or the previous year.
And typically, how many investments would an investor get?
We tend to have between 15 and 20 investments in every year's scheme. And the reason for that is that we can't tell at any one time which companies are going to be looking to the market for new money. So we tend to invest up to 10 investments in the first 6 months, and hopefully up to 10 investments in the second 6 months. But it's difficult to predict exactly how many are going to come to the market. So we hope that we'll be able to take advantage of companies accessing good stock markets during that period. But there's no guarantee.
And are there any characteristics you look for in these companies?
We like to look for companies that have got exposure to a growing market, and they're growing within that market. They've obviously got to be sufficiently developed that they have grounds for going to the public markets. We particularly like to invest in companies that have had the same management team in place for a good, strong period of time, and that's what we're looking for. But it's exciting businesses in growing sectors that are really what we're looking for.
And are you getting a lot of opportunities, I assume, at the moment?
This year's been interesting in the sense that there have been many more IPOs since March 2021 than there were in the previous year. I think that is because people have got more used to the markets operating virtually, if you like, for a long period. It's been much. There's a well-trodden path to get to the markets, despite the fact that people can't meet in person. So there have been more IPOs this year, partly because of that, and partly because the markets have been quite buoyant. So there have been a good steady flow.
And can you just tell me about some of your recent investments?
Delighted to do so. We've made investments in several different businesses. We tend to invest quite heavily in life sciences and technology businesses because those are those are the sectors which are using the market most. But businesses which we have invested in this year, one business called Crossword Cybersecurity, which is run by a well-known entrepreneur called Tom Ilubi, and is involved in the cybersecurity space, which is a growing and maturing market. And this business is growing fast, and we've invested in several other schemes in previous years, and divested actually from it. Another business we've invested in is called Saietta, which makes electric motors for motorcycles and also for outboard motors, actually. And that business came to the market this summer, and has been very well received.
And any others?
Well, there are lots of others. We've invested in a business called Aracor, Trellis Health, which was a spin-off out of EKF Diagnostics, which has been also very well received by the market.
And some more mature companies in the portfolios of the past that you want to talk about?
Love talking about our mature companies. The one I always talk about is Gear for Music, which we don't hold any longer, but that was one of our most successful businesses, a business which actually is involved in musical instruments and the distribution and sale of musical instruments, which has gone on to being a huge success. But businesses which I'd like to talk about really are, one is Director Plus, which is a manufacturer of graphene products. Graphene's been a business which has been around for now several years, but the interesting thing about Director Plus is they tend to partner and find applications for their graphene products with other partners, whether it be in textiles or in environmental work, which they do with the oil industry. And I believe that that's really, really very interesting business indeed. Another business which is at the sort of forefront of technologies and does in-content advertising is Myriad Advertising, run by a chief executive called Stefan Berenger, who came out of Publicis, and identified this as a very interesting business in the advertising space. And Myriad is a business which I think is very interesting and well placed to take advantage, particularly of the developing advertising world.
Investors, one of the most important things for them is to get their money back. Well, can you talk to me about returning money to investors? You know, how long are you usually invested for?
One of the advantages of the AIM EIS scheme is that we're investing in publicly listed markets. So there is an element of liquidity in every investment that we make, and we try and get our investors their money back within 4 to 5 years. Of our existing schemes, we have exited 2 in their entirety, and the 2017 scheme, which I'm currently liquidating, is probably 90% now sold.
And you've exited quite a few companies this year.
We have, yeah.
Tell me about a few of those.
I'll tell you, Polarian is a very good. In 2017, we had an investment in a business called Polarian, which makes MRI enhancement to MRI scans, which is particularly helpful in the respiratory field. Polarian's a very interesting business. It's based in North America and has used the AIM market to raise money because they found a more receptive market here than in North America. And we sold out of our first stake in Polarian during the course of this year. We've actually reinvested in Polarian and other schemes as well, so we believe that still has good potential. Another business was Realife, which makes implantable polymers. That business was formerly called Aortec, and we have just recently finished selling that for the 2018 scheme at around 3 times the investment price. But that business is an extremely good business. We also own that in other schemes as well.
And do you get many failures?
We do. And in anticipation of that question, I just looked at our 2018 scheme to see what one might expect in that, and I think it's probably fairly representative. Of that, we will have 2 companies which have lost 90% of their value, 5 companies which will have lost around 50% of their value, and the balance of 18 companies will have done rather better. Now, those, as far as companies that have gone bust during our things, there's only one company which I can think of that has gone bust since we've been running these schemes. Very often that they are rescued at some stage later, but 2 out of 20, I think, is probably a reasonable expectation of total losses, and then it depends rather on the market as to how many businesses do not actually meet people's expectations.
And what's your target return?
We would hope to return 130% before taking advantage of the tax advantages. And in practice, we have achieved that on 2 occasions and not on another. It does depend very much on the state of the market when we come to sell. And as the market is very much driven by liquidity considerations, and if the market is in an illiquid phase, which happens, then it may be difficult to get out of some of our investments at sensible prices.
And finally, Andrew, why should investors choose your EIS?
I believe that they should, if people are prepared to take the risk to invest in exciting businesses which qualify for EIS, which are able to access the public markets, our EIS scheme gives people a very good exposure to a selection of investments which will have seen, and we will have seen all of the available qualifying investments during the course of that year. For people who are prepared to take that risk, I believe having an exposure to AIM companies is a very good way of utilising the tax reliefs and getting a good exposure.
Andrew Martin-Smith of Guinness, thank you very much.
Thank you so much.